Generally, the global economy for 2013 is on a better footing compared to last year. However, several events in the second half of this year may unsettle the markets. These events include the US tackling the issue of raising their debt ceiling in July. Australia and Germany will be having their parliamentary elections in September, and the potential political developments in the Eurozone which may derail progress. Malaysia should remain fairly resilient with the many fiscal response the government has made recently to shore up the consumer demand. Now, with the general elections overhang be removed, we believe the Malaysian market will be doing well, moving more in line with the regional markets. We have been more cautious leading up to the elections, and we have positioned our portfolios in a defensive mode. But it is often during such periods where mispricing of companies occurs. While we have a base case idea of the outcome of the election, we try to position ourselves in companies that we believe have good business models, strong cash flow, and strong earnings outlook. And these companies also have relatively limited impact from politics. For the Malakoff IPO, we cannot provide too much information on it, other than it will be one of the bigger IPOs of the year, and will add weight to the power sector, which was missed post its own privatization and delisting way back in 2006. Iskandar Waterfront Holdings has been an interesting name that has surfaced more of late, given the success thus far in the Iskandar region. According to the media reports, IWH could list at a market cap that is on par with Malakoff and is considering a dual listing in Singapore as well. After a milestone year for Malaysia IPO market in 2012, which raised 23 billion from 15 new listings, 2013 should still see several decent-sized IPO besides those mentioned just now. These include KLCC Staple REIT, the first of its kind in Malaysia. US President Obama talked about implementing tight discretionary spending caps, ensure their defense budget is driven by a clear strategy that reflects their national interests, implement fairer tax rules, continue to reform the healthcare system, and to address fiscal health by reducing agriculture subsidies, reforming the federal employee retirement and health benefits, unemployment insurance system, the postal service, and make new efforts to provide a better return to taxpayers from mineral developments. If the budget cuts goes through, US households are likely to adjust their spending habit in accordance to the tax policy changes. The flow-through effect to the global economy should trickle down thereafter. The US economy could see some drag amounting to about 1% of GDP, adding significant restraint to the economic growth for 2013. However, the US economy may have regained enough strength so that it can weather the trim fiscal measures and continues on its recovery. Depending on your risk profile, we believe both equity and fixed income will continue to do relatively well this year. For Malaysia, once we have gotten over the general elections concerns, the economy can then move forward. Assuming a relative status quo in terms of election results, we expect the Malaysian market to move in tandem with the global market thereafter. With the global economy recovery taking place nicely, we expect risk appetites to improve, and 2013 could be a strong year for Asia and Greater China equity funds given their attractive valuations.